This video introduces the basic accounting equation and then links the 4 financial statements to it. The mechanical process linking business transactions to the preparation of the financial statements is based upon a fundamental algebraic equation, which we have already seen in prior videos, called the basic accounting equation. It states that assets, the resources at management's disposal, are always equal to liabilities, the obligations of the company, plus shareholders' equity, the investment in the company made by the shareholders. The phrase shareholders' equity is used when referring to the equity of a corporation because the owners are called shareholders. The phrase owner's equity is used otherwise. Simply, assets represent what the company's managers have to work with, and liabilities and shareholders' equity represent where the assets came from, the sources of the assets. Liabilities are obligations to be paid back in the future, and shareholders' equity, the investment made by the shareholders or owners. Assets, liabilities, and shareholders' equity are each comprised of a group of accounts into which the transactions entered into by a company are recorded and balances are maintained. Assets, which represent resources designed to generate revenues and eventually cash, are divided into 2 account categories: current assets and non-current assets. Current assets are expected to be converted into cash sooner than non-current assets. Current assets include the company's cash balance, short-term investments, investments expected to be converted into cash relatively soon, accounts receivable, dollar amounts expected from customers for whom services have been rendered but who have not yet paid, inventory, the cost of merchandise or products awaiting sale, and prepaid expenses, expenses that have been paid for prior to their use. An example is insurance, which is paid for in advance of the coverage period. Non-current assets include long-term investments, investments expected to be held well into the future, the cost of property, plant, and equipment used in the business, and the cost of intangible assets, such as patents and trademarks, that help to generate future revenues through the use of exclusive rights. In prior videos, we have referred to the non-current assets and the short-term investments as producing assets, assets that support operations. Think of them also as investments, the related cash flows of which are reflected in the investing section of the statement of cash flows. The current assets, except for the short-term investments, have been referred to in past videos as operating assets, and their related cash flows are reported in the operating section of the statement of cash flows. Similar to asset accounts, the liability accounts are divided into 2 categories, current and non-current. Now you see how we begin to build a balance sheet, which, by the way, houses all the other financial statements: the income statement, the statement of cash flows, and the statement of shareholders' equity. This course contains 12 videos, about 2 hours of total running time, which is only about 10 minutes per video. And it is designed to thoroughly cover how the financial statements are prepared. And trust me, there's no better way to understand how to read and analyze the statements, which is the subject of the next course, than to thoroughly understand how the statements were created in the first place.